Hello, everybody, and welcome to our EEP Power Up Deal Desk Thursday. We are so happy that you could join us today. We will have some Q&As in a bit. And just a reminder, our chat is closed. So if you could use the Q&A box or, of course, raise your hand, I would love to talk to you and get any of your scenarios, guideline questions, any of your questions asked. Travisa Financial, we are striving to make homeownership a dream come true for everyone. And through homeownership, we're creating wealth with our innovative loan programs, such as our EEP Earned Equity Program. What is EEP and how does it work? So essentially, a government entity, which is a Native American tribe, Tulay River, they purchase a home that is selected by your home buyer. Simultaneously, while the government entity, the tribe, is closing on the FHA loan for that property that your home buyer chose, they are entering into a homeownership finance agreement with a memorandum that is recorded on title. This is to secure their interest in the home. They can make improvements, remodels at any time they're liking. And then they also do receive a 1098 at the end of the year. So they get to write off all that taxes, the interest on their taxes. Let's move on to the program highlights of EEP. So EEP only requires 3.5% down, such as traditional FHA loans. And in addition to US citizens, we also allow DACA, permanent resident aliens, and ITINs. And those are all at 3.5% down. We have low and no credit scores. So we require a 580 minimum credit score. And we can also do no credit score that just requires a few extra alt trade lines. And compensating factors always help with extra reserves and things of that nature. We have our 3-month bank statement program. This bank statement program is not only for our self-employed borrowers, but they're also for our W-2 employees, our ITIN borrowers, gig workers, seasonal, those waitresses, waiters that have a low hourly wage, but make a lot in tip and, don't like to claim it. So that's a great 3-month program, 3-month bank statement program for all of those individuals. The DTI is 50 over 60. Keep in mind with your self-employed borrowers, there is a 45% fixed expense ratio that is deducted. And we do have a tiered option. So we have a tiered option for those that are, maybe more in the service industry where they don't even come close to having 45% a month in expenses. So those are definitely an option if you run across those type of home buyers that you want to take a look at. No source or seasoning for funds to close. So I know that we do have individuals at times that don't feel comfortable with our financial institutions, and they like to save their money at home and keep it in a safe. And so they can deposit it when we get closer to closing. And prior to submitting, we just like to know where their funds are coming from if their bank statements currently do not show sufficient funds to close. So keep that in mind when you're submitting with funds that are at home that are going to be deposited closer to closing. Bankruptcies are okay. Bankruptcies, Chapter 13, if they're in a Chapter 13 is fine. We just need to see that they've made their payments on time for 12 months. And with Chapter 7s, they can start the process, and we just require that they are discharged 1 day prior to closing. So great option for your clients that are possibly still in a bankruptcy or not quite out yet. We take all property types that are FHA approved, manufactured homes, PUDs, single families, 2 units, condos. We got to make sure that your condos are FHA approved though. So if you have a client that's interested in a condo, and if you don't have access to see if the condo is FHA approved, reach out to one of us and we're more than happy to take a look at that for you. And last, seller contributions up to 6% of the sales price. This definitely will help offset your borrower's cash to close. You can utilize the 6% for not only the closing costs, but also if they want to, buy down the rate a little bit. So always good to have that much available for seller credits. So when you're qualifying your borrower, there's many different scenarios to look at, from, of course, the 3.5% down ITIN to the 3 months bank statements for self-employed W-2, 1099, seasonal gig workers, and tips that aren't claimed. We allow gift funds, so but you cannot use gift funds for reserves, which is similar to FHA guidelines. And again, the max DTI is 50 over 60 with a 12-month clean VOR. And we do accept those alt trade lines. So if you pull credit and you're pulling a score, but trade lines may be old and inactive, we definitely can take an alt trade line for your one trade line that is needed. So looking at the comparison of the ITIN market out there, you can see that we definitely beat our competitors in down payment. Most lenders want 15 to 20% down. The number of bank statements required, if we're doing a bank statement program, 3 months versus up to 24 months. Our credit scores and no score. Most of the lenders want a 700 or higher, and as said previously, we go down to a 580 and do also have the option for no scores. We also have the tiered expense ratio again. And if you want information on that, please reach out to me and I can send you over a breakdown. And our EEP support center. So we have many, many different options to help support you throughout the process of your loans. We have our 888 phone number that you can call. We have our dedicated email, EEP questions at travisafinancial.com. Our amazing support staff. We have Norma and Ben that are both account executives. Myself, I'm always happy to help out whenever I can. And then we have Shari, who is in our operations. She's our AVP of operations. She's amazing to help with the TPO Connect side of everything, getting your loans submitted, and just all around here to support you, get you, start to finish, and any other support that you may need with questions, guideline questions, scenario questions. I would love to help you out with any questions that you may have today. Okay, so I have a question. There's a home buyer that's looking at doing buying a new construction, and the builder won't sign the assignment addendum. So the assignment addendum is basically what is needed to assign the contract over to the tribe, because it's your client that goes out and finds the home that they want to purchase, that they want to live in, the home of their dreams, and they make the offer, they put the earnest money down, and then as soon as everything is accepted, there's an assignment addendum that the buyer and seller then sign, and we send it over to the government entity, the tribe, and they sign that. And that assignment addendum is assigning the entire contract over to them so that they can go ahead and complete the FHA loan for this home for your home buyers. So yes, some builders have an issue with signing the assignment addendum. So one thing that we have put out there that is allowed is, if you come across this situation, what you would want to do is let the builder know up front before you put your home buyer under contract what type of loan program we're going on. And if they from day one say that they will not sign the assignment addendum, then we can go ahead and put the home under contract from day one under the tribe's name. This is a process that we came up with last year when we ran across this situation many times. And so you'll just want to have the builder put together the contract as he normally would, list Tulay River as the home buyer, send that contract over to me, and then I will get it over to Tulay River for signatures. The difference with the earnest money is a little bit different on that scenario. What we would do is your initial home buyer would wire the earnest money into Tulay River, and then Tulay River would wire the earnest money into the builder so that it does reflect and show that it is coming from them. Sorry, I have a little bug. But yeah, so that's something that can be done. We ran into that issue before and came up with a resolution that is working great, and have done many of those purchases that go directly with Tulay River for new construction. Okay, so how many trade lines are required? So if you have a 580 score or higher, then there is one trade line required. And again, if it's not reporting on the report, then we can use an alt trade line. You know, auto insurance, cell phone bills, utilities, all of those. If you don't have a credit score, or it's below a 580, then there are two alt trade lines that are required. And depending on how the file looks and how low the credit score is, if it's that route, then we may need to get an exception. And so if you ever run across a file where you're wanting to get an exception for a credit score that is under 580, definitely reach out. Let's take a look at the whole scenario, and then we can advise how to go from there, and if we want to get the exception, or how it just looks overall. All right, any other questions for today? If not, I will go ahead and give you the rest of your day back, and I look forward to seeing you on Monday for our Scenario Mondays for the continuance of our EEP Power Up. But of course, feel free to reach out at any time. I will put this slide back. So have a great rest of your day, and thank you for joining us today.